Hello, everybody. This is Jose Blasco. We are 30 seconds away from starting the session. This is a sound check. Please go ahead and confirm with a quick message on the chat box that you hear my voice. That would be a great confirmation for me to have, so I know that when we start, all is good. You hear me, you see me, and basically we're ready to trade. So please, quick message on the chat box would do. Sound check, please. Thank you so much. Very good. We just hit the time to start, the top of the hour. Let me turn on my video stream as well, apart from everything else. How are you, my friends? How are you, everybody? Ready to trade? Let's begin our session. My name is Jose Blasco. Welcome to the Get Together trading session. Today we are getting together to do some intraday trading. Hence the name of the session, which is short term. Today is September 1st, 2020, so first day of the month. So let's dive into the markets and see what's available for us to trade. We're going to be using in these short-term sessions, we always use markets normally with a great level of leverage since we are catching tiny moves because we trade intraday, so the moves are always tiny. Even if it's a nice trade, it's still a tiny move compared to what you could get in a monthly move, for example. So in order to profit nicely from those tiny moves, we normally use leverage, and therefore forex and futures is our bread and butter, and therefore we're going to be combining such opportunities. Okay, before we start, I have a disclaimer. I need you to read carefully. This is important stuff, and therefore I'm just gonna go ahead and highlight it so you can read it. It's on the top of the screen. Follow me. Those clear demonstrations are for educational and instructional purposes only, isn't it? So basically, this means that we're going to be trading. I'm going to be identifying market opportunities. If they meet the rules, then I'll give myself a green light. I'll say, let's go. Okay. And of course, when I say that, it doesn't mean you have to go. If you decide to go, it's obviously your responsibility. If you decide to utilize greater capital or lesser capital, real capital, paper money, demo accounts, real accounts, all of those decisions are yours. Okay, but of course I'm here. I'm more than happy to help you and guide you, so feel free to ask questions anytime. Ultimately, of course, make sure you are educated, you know what you're doing, you understand when I put a trade together what is it that I'm doing, so you can evaluate if taking the trade makes sense to you or not. Okay, cool. So let's team up, let's interact. I'll be asking you questions. Please give me answers. You will be asking me questions. I'm ready to give you answers too. So again, let's team up and let's enjoy our session. We are ready to start now. How are you, Furman? Good to see you, my friend. Thank you for the message there. So let's begin. And as always, our GPS, if you wish, our map, our guide, our radar, it's a trade station. We are looking for those golden alerts. And right now, as we speak, we can see on the NASDAQ a golden alert near sensible with a blue climate. Okay, the one below with the Russell, notice it's unconfirmed. Okay, also notice the one here with the S&P is basically negative number violating the climate a little bit. Okay, so we have here three situations. The Nasdaq is blue, the Russell is blue but not confirmed, the S&P is red, but it seems that it may change climate from red to blue. So there is a little bit of indecision in the marketplace. Okay, let's go ahead and open the Nasdaq chart. We'll start with the Nasdaq today, Nasdaq 15-minute time frame, and let's begin our analysis to see if an opportunity is available based on our rules or is not. Okay, let's take a look at the Nasdaq. Okay, so what do we have? Well, again, with the Nasdaq, we have a climate is blue, thick and blue dot. So it's a blue climate. It's confirmed. So it's time to trade. And being blue, the right side of the higher probability side in the market is identified as being long. Okay, so we want to go long. Especially statistics suggest that long trades could last up to 8 candles on the way up, 8 candles on the way up, where every candle is 50 minutes. That's like 2 hours long. And this is candle number 4. So if we enter now, catching 1 hour moves in our favor should not be that strange. Okay. But that, of course, is only if the whole setup and or everything that we have on the screen would agree with that statement. Okay. And actually, it doesn't because while the climate is defined and is healthy, is in a good position, everything else, we look at our reference values for us to take the trade, which is 12,000 to 21, which is right above this point, okay, something like that, and notice that there is no green UFO there in any of the charts at 12,221, more or less here. There is no green UFO in any of those charts. Okay, there is a green UFO, but it's much lower, and therefore it does not meet the rule. Okay, and by the way, notice how the climate on the Nasdaq just went from confirmed to unconfirmed. Okay, again, we could see a little bit of that coming, and again, you never know in the end, but you could see a little bit of this coming when you see the contradiction with the S&P and the Russell and the Nasdaq. So this is something that could be problematic. Okay. In any case, I saw a flashing alert for crude oil a second ago. So let's go ahead and open crude oil. We'll go back to the Nasdaq. Maybe the Nasdaq will give us an opportunity just in a few minutes or maybe even a few seconds. So we'll go back and check. But as of now, we don't have a green UFO in the right location, and therefore trading will be hopeful. Okay. So we're not going to do it. Okay, so with crude oil, what do we have? Okay, well, with crude oil, we have an opportunity to take a trade, but only for the next 10 minutes. Okay, why is that? Well, first, climate is confirmed, thick dot, and the color is blue, so we should be a buyer. All of this is good, and this basically is giving us a go ahead. But we've been in this climate already for 6 candles, and statistics suggest that the duration of such climate is actually 6 candles, because I take 5.04, always round up. So even though it's 5.04 and you would think it's closer to 5 than to 6, we always round up. So it's 6 out of 6. Okay, 6 out of 6. So in other words, 10 minutes from now, it will be 11:15 a.m. in New York, and we're going to have an update on the climate, and therefore we're going to be moving to candle number 7. Okay, and therefore the trade will not be valid any longer. Okay, now the one thing I did not confirm, so let me do it very quickly here. Oh, wait a minute, I'm loading the wrong website on my other computer screen. Let me load the right website. Here we go. So the one thing I have not confirmed, and it's always a very good habit to never be overconfident when it comes to volume and open interest on those futures markets. I mean, the website barchart.com suggests that the V is the right symbol. The V is right there. We do have the greatest volume and open interest, so it's fine. The CLV is the symbol we want to trade, which is the one I have on my chart. So I kind of knew that already because obviously I'm watching this every day. But again, I didn't do the process like I normally do, which is I first go to bar chart every time we trade commodities or metals or any of the futures products that have expiration dates that could be as soon as every month. Okay, because equity like the Nasdaq, for example, we just saw it's every 3 months, so there is no need for you to check every day, right? But for markets such as crude oil and so on, it's very easy to make a mistake and use the wrong letter. Okay, so anyway, so crude oil, what do we have? We have the climate I just defined. So we still have, a few minutes to go. 43.23. It's right there, and there is no UFO. Right there, and there is no UFO. And 23, we do have a UFO there. Okay, we do have a UFO there. Where 20. Wait a minute. What am I saying? No, actually we don't. I was looking at this backwards. I'm not sure how I did that, but 23 is obviously under 24, which is the bottom part of this UFO, and therefore right here is where the EMA is. Okay, and we don't want to take a trade where the UFO is above or below the EMA. We want the UFO to envelop the EMA. We don't have that set up on crude oil. We don't have it on the Nasdaq either. Okay, so with those two markets, it's a matter of waiting at this moment in time. Okay, what else is available? So again, with the Nasdaq, then we have the Euro contract, which is hopeful. So we're gonna pass on this one. We have gold, which is hopeful. So we'll pass on this one. Crude oil, we talk about it. So, and this one, the Russell is not confirmed, and the S&P is probably going to change climate with a negative value. So we'll see that at 11:15 in New York time. Okay, so I could go down and start looking at the 60-minute time frame and the 4-hour time frames as well. I could certainly do that. Nothing wrong with that. But before I get into this, okay, I'm gonna start looking at currency pairs. I'm gonna start with Forex. We have the pound US dollar giving us a near sensible opportunity for a long. So let's move into the world of Forex, check the pound, and then we'll come back to futures in a few minutes time. Okay, so looking at the GBP. USD. How's it going so far, everybody? You guys have been very quiet. Feel free to type, share with me, guys. How is it going? So again, we're looking at the pound, US dollar. This is based on a 1 hour climate. Okay, so I'm going to focus on the two charts on the right, meaning on the left, I meant to say, meaning that the charts on the right, I'm going to ignore them because those are for the 4 hour setup or the daily setup, where right now I'm looking at the 1 hour setup, 60 minutes. Okay, so what do we have? Okay, if I look at this particular market, well, it's pretty clear. We have a confirmed climate to the upside. Okay, candle number one out of what statistics would suggest 7. So if we catch a trade, we're going to be in this trade for like 7 hours. So that is exciting for an intraday trader. Our reference price for us to get into a trade would be 42. Okay, and therefore, if I turn on AutoUFOs on the 8-minute time frame, I'm going to be looking at UFOs around 42. There are none. The nearest UFO available is located at 29. Where our entry, we want it to be around 42. So that's not a good news. I'm not going to give up yet. I still have one last check to do, which is look at the 8 ranges time frames instead of the 8 minutes. And when I do that, what happened? So we have UFOs located all the way from 134.41 to 134.38. And you know what? I'm going to say that's good enough for us to plan on a trade. Okay? Because the reference value, it's 42.7. But the pound, you know, if you look at this carefully, the pound is a bit higher than that, isn't it? So the pound is currently trading at 134.47. Okay, so 5 pips higher. So if the pound drops all the way to these UFOs, the EMA, which is currently 42.6, may become 42, 41 something, and that, my friends, is within those UFOs. So we're gonna go ahead and merge all those UFOs and treat them like it's one and plan the trade out of this collection of grouped UFOs. Okay, so we do have a potential trade here. So let's go ahead and maximize the 1 hour time frame. We are now looking for a target. Okay, so if I go long the pound in the 1 hour time frame, where will I take my profits? Okay, wow, interesting. Why is it that we have there is no data? Why is that? Okay, yeah, so no data there. Okay, now some data is coming up. Yeah, so with the amount of data that is loaded on this platform, it seems that, yeah, well, there is data above, right? So I'm not sure why I'm not getting any UFO. Let me go back to the beginning. So 134. Oh, okay, I was looking at the values wrongly. I was looking at 132 is 134. Okay, yeah, so I'm wrong. Yeah, so we don't have data on the left. Okay, and this is because with TradingView, with all brokers really, normally there is a moment in time where you reach, okay, the maximum amount of data that you could download. Okay, and in this case, with all the data available here for the 1 hour time frame, we only have data below price, but we don't find data above price because the pound has been moving higher. You know, and it's not been that high for a long time. So with other platforms, okay, you know, we could look at TradeStation, for example, and we may be able to find UFOs above the current price, because with TradeStation you can basically load information all the way since the birth of this currency pair, and you know, it would take a while to download all of these, but you could get it. With other platforms, normally there is a limit, okay, and even though reaching the limit is not likely, it's looking like today we are reaching the limit on the 1 hour time frame. So what could you do if this was to happen to you, which is a situation which is very rare but could happen, as it's happening to us today? Well, you could go ahead and go to a larger time frame. Okay, go to a larger time frame to see if you get lucky with that. Okay, which in this case with a 4 hour time frame, we are not getting lucky either. Okay, There is a little bit of data above, but just a little bit, and no UFOs are identified by the technology. So then you just keep moving higher to a higher time frame, and in this case with the daily time frame, this would suggest that the next target would be located at 137. Okay, so notice how all of these happen in April 18. And again, if you count how many 1 hour candle you have from now, from today until April 18, the problem is that it's many, many candles. So again, unless you're using a platform such as TradeStation, where you could download unlimited amount of candles, so most platforms will not show you the UFOs. Okay, so 137.12, that would be the location for our target based on the information that we have available. I don't think we would reach that target for an intraday trade. We're talking about hundreds and hundreds of pips to get there. Normally, an intraday trade is going to be a bit shyer than that. Sometimes you may be lucky, and next thing you know, you got central bank intervention, and next thing you know, the currency goes flying, and you do get there very quickly. But that would be a little bit of a matter of luck, isn't it? In a normal case, we would prefer to set the target on a 1 hour time frame because our target would be closer and it would be much more realistic. But we don't have that information. So if you find yourself in a situation like that, then the way to treat this market opportunity is, number one, set the target based on the information you have, which is 137.12.6, and then go ahead and be ready to manage the trade and trail stop and trail stop and trail stop. And probably what's going to happen is that, somewhere in between, so the market was moving your way, and somewhere in between starts moving against you, and you get stopped out somewhere in between. And guess what? If you enter at 132 and you're out at 134.5, so you're still going to be very, very happy with the trade. If something very powerful and rare was to happen, and if you reach 137, that would probably be the best intraday trade you would take in the next 5 years, and that's why I said it's unlikely to reach that target. Okay, but at the same time, we don't have access to more market information. If you are using TradingView in this case, or 99% of the forex brokers, you will not have access to what are the UFOs in a 1 hour time frame. Okay, again, with platforms like TradeStation, you would, but other platforms, the majority. I said 99%. I just obviously improvised that one, but you get my point, right? With the majority of platforms, you will not get it. Okay. So anyway, so we're gonna set the target using this value because this is what we got. So 137.12.6. Of course, we're gonna round it down to 137.12. Okay, this is gonna be the location for the target. It's a sell order, so we sell to the bid. 137.12 is gonna be the bid price, so that's gonna be the location for our sell. Okay. And with that in mind, I'm going to come back to 1 hour time frame. I'm even gonna turn off the UFOs and go back to the size of a chart I had before, so I can continue the planning. Okay. By the way, price is approaching the entry. Okay, so 134, 134. Is it 44 now? 140, 134.45.8. Okay, this would be the location for the entry. No, this is not the location for the entry. We said this was going to be the bottom UFO, which is the 41.5. Yes, now I got it right. So 134.41.5, this will be the location for the entry. But of course, the first thing we need to do is that we need to convert this 5 decimal place price into a 4 decimal place price. So of course, because it's a buy order, we round up. So that's going to be 42. Okay. And then because it's a buy order and we buy from the ask, but the chart shows the bid, we also need to add 2 pips additional. So that would be 134.44. That would be your entry price. Okay. Which, if you think about the distance between 44 and those bottom UFOs, 38. So that certainly envelops 42. And therefore, as I said before, this is a valid entry. Okay. Now the stop is going to be located at 134.38.7. That would be the location based on the reference price. But of course, we need to do adjustments. First, we need to convert 5 decimal places into 4. And because it's a sell order, it's a sell stop. So we're not going to round up, we're going to round down. So it will be 134.38. Okay, not 39, but 38. And then because it's a stop, we will also add additional 5 pips, and add in this case means subtract. So that's going to become 33. Okay, that would be the location for the stop. And price is almost entering the UFO, so it's almost time to take this trade. So the stop will be 134.33. Okay, so my only concern there was 33. 33 is below 34 here, so then we're fine. I remember there was another UFO below. Okay, so yeah, got it. So by the way, we are in the trade. Okay, so price is right now meeting our condition for entering. So let me go ahead and write it down on the screen because we are in a trade right now. So from top to bottom, the final target would be 137.12, which again probably we will not reach that target. The safety target, okay, it's going to be equal distance from entry to stop. So our entry is 134.44. Yes, correct, 134.44. And we got 11 pips to the stop, which is 134.33. So if I add 11 pips to 44, that becomes 55. Okay, so that's going to be my safety target. The long entry, as we said before, is 134.44, and the stop loss, which goes below the entry, is 134.33. Okay, so this is the trade plan, and what we expect to see now is a little bit of a slowdown, on-field orders to kick in, and then the price will start moving up. At the same time, that climate is supposed to develop, that EMA is supposed to add more on-field orders. So again, we are at the right place at the right time to take this trade. And in case we're wrong, we have a stop in place in case the climate was to change, the on-field orders were to be canceled. So of course, we'll take a loss, but the loss is going to be determined and quantified and limited thanks to the fact that we're using a stop loss. Okay, so I'll give you 1 second there to take a screenshot, and I see a few messages in the chat box, so I'm gonna go take a look so I can answer your questions, and then we'll move into the next trade. Okay, cool. So very good. So we're in the trade here. Okay, again, the entry was 44 right there, so that was the entry. Okay, the stop is 33, which is a bit lower. Let me do the scaling properly. Okay, so the entry was somewhere here. Okay, the stop is more or less here, somewhere here. Okay, so obviously, since we enter, this market went against us a little bit. Okay, but this is a normal thing before price starts picking direction. Okay, so we'll see what happens if in the end this trade is successful or not. But this trade is now meeting entry. Okay, cool. So let me see comments, questions. So Miguel, yes, Miguel, you saw the answer. Very good, perfect. Mircel, hi Jose, Randy from Indonesia. Very nice to have you with us. You're working with Wian, wonderful. You are in very good hands, my friend. And you send a hug to Duyan from me, okay? And now learning to manage the trade. Very good, fantastic. Very, very nice. Okay, so let's continue. Let's go back to the red screen, okay? We spent a lot of time with the pound. Good news is that we are in a trade, so we'll see how it develops during the session. But there may be other opportunities. Let me see what's happening with the market indices. So the Nasdaq remains as unconfirmed. The Dow Jones is hopeful. Okay, so no good. And then both the Russell and the ES with the gray box are unconfirmed. So all of this is not good. And actually everything else here is hopeful. Okay, and the only one sensible is non-confirmed, which is the one on the top with the Nasdaq. Okay, so with a 15-minute time frame, right now we are in waiting mode for another 7 minutes until we reach 11:30 a.m. in New York, because there will be an update, obviously, on the 15-minute climates and opportunities may arise. Okay, so I'm just gonna close. These guys. Okay. And we'll come back to 15-minute time frames later on. We do have an opportunity, actually two opportunities, with the crude oil and the Nasdaq on the 60-minute time frame, which we could go ahead and explore. Okay, so let's go ahead and load crude oil. Actually, I need to convert the 60-minute time frame here, and for the Nasdaq, right there is the 60. So I need to use equivalencies for a second. We got stopped out on the pound. Let me go back to the pound, Miguel. Yes, you're right. Absolutely right. Big push. Big push. Violating what the climate was suggesting would happen. Okay, and so that's a stop out, guys. A clear one. Okay. Obviously, it's not pleasant to be stopped out, but to be honest, if I'm going to be stopped out, that's how I like it. Meaning that I was wrong. It happened quickly. Why? Because now I can go ahead and take another trade, right? Because if I am on the pound trade and I'm not being stopped out quickly, I'm kind of stuck there waiting to see if I'm going to reach safety target or not. So of course, it's more desirable to reach safety target, but if in the end you're going to be stopped out, I'd rather be stopped out quickly instead of be stopped out a bit later. Okay, so at least that's my philosophy. And if you're a bit more conservative, maybe you are not too comfortable with this concept. I could understand that, especially if you're new to trading. But with time, you will realize that basically the toughest and the most boring part of a trader is the waiting time in front of the screen. That's the worst. And personally, I appreciate when I don't have time to waste, and therefore, if I'm going to be stopped out in the end, I'd rather be quickly. Okay, so we'll be looking at other trades in a second. Sarjana, good night. How are you, Sarjana? Good to have you with us. So the Nasdaq in a 60-minute time frame. What do we have? Well, we don't have a trade. Okay, a similar setup as before, because we do have a defined climate. We have a different reference value because we're using a 60-minute time frame now, as you can see here. So it's a different setup with a 60-minute time frame. So the value is 207. Okay, 207 is lower than before, but same story at 207. There is no green UFO in any of the charts above, and therefore there is no trade to be executed. Okay, so what I'm going to do is I'm going to move into crude oil. I need to rename my workspace to be 60 though. Okay, not only the workspace. Actually, I need to look at equivalencies. Give me 1 second, guys. I need to bring an equivalency table. You will see why in a second. Okay, for the ones of you trading futures already, you know exactly why. But for the ones of you that you don't trade futures, you are about to see why. So anyway, so here is the equivalencies table, and it looks very overwhelming. Okay, so please don't be overwhelmed. I'm just gonna zoom in a little bit. Okay, and I'm looking at the column in the center. Notice that every time we trade 60-minute time frames, we combine that with the 8-minute time frame, right? So the first thing I'm gonna do is go back to my crude oil. Notice the 15-minute time frame below here. I'm gonna change it to be 60. Okay, I'm gonna change it to be 60. And once I got this time frame change, the one here on the top, which is 2 minutes, I'm going to change it to be 8 minutes. Okay. And then I need share bars and tick charts. Okay. Here and here and here and here. And that's where the equivalencies come into place. So when I look at the crude oil, okay, when I look at the crude oil, which is right there, the equivalencies for the crude oil on the column in the middle are those. So 2584, 1597. Okay, so 2584, 1597. Okay, and then we have 610 and 377. So 610 and 377. Yes, good. And then now, like a last tip here, which is to save a little bit of computer resources, because running multiple charts and multiple charts in multiple monitors and everything else could be very time consuming for your CPU. So because we don't need that many candles in those H time frame charts, I'm just reducing the quantity of candles on the chart just to minimize computer issues out of those key times, like right at the open, or if there is a peak of volatility because of a news announcement or something like that. And then there is so much processing going on in your computer because of so many ticks and so many shares being traded. And next thing you know, your computer could actually go ahead and freeze, right? So in order to minimize these possibilities in those very strange but times that do happen from time to time, you may want to reduce the amount of bars per chart if you don't need to have that many. Okay, especially if you use multiple computer screens. So anyway, so I got all of these ready, and so let's see what we got. Do we have a trade? So well, we don't. Why? Because it's the same story. So we have a confirmed climate, and our reference price is 13, and 13 is basically where price is now, and where price is now, we don't have a green UFO in any of the charts. Okay, and because there is no green UFO, so then there is no trade. Okay, so we just need to be waiting for UFOs to form, and the moment UFOs form, then we'll have a trade. Okay, so both the Nasdaq and crude oil have a very similar setup, really, where everything is good on the chart, but we are just missing that UFO enveloping the EMA. There is no UFO in the right place. Okay, so we are back to the radar screen. Actually, I'm just gonna wait 30 seconds, because 30 seconds from now we're gonna have an update on the 15-minute time frame setups all the way here on the upper left, and therefore often we'll have new opportunities, and I'll be ready to analyze those charts. I'm gonna take a sip of water if you don't mind, guys. Cool. So we got 5 seconds to go, and I see a few comments and questions on the chat box. I'm coming to you guys in just a little bit. Here we go. So updates, well, yes, we have updates and we have new alerts near sensible. Bad news, those alerts that are near sensible are coming with a gray box, and that means that those climates are not well and not confirmed, as well as this opportunity here is also a gray box. So everything that is near and sensible is a gray box, and everything else got the word hopeful in it. And hopeful means that the climates have propagated too much already, and while a crazy market could continue being crazy, while an expensive market could become more expensive, while a cheap market could become cheaper, it's not ideal to enter when plenty of the move has already happened and you didn't profit from all that, very lengthy move already, right? And entering at the end of the move, expecting the move to continue and not to end, is hopeful, isn't it? Could it happen? Of course, but it's lower probability, and therefore I'm just not going to go for it. Okay, that way, or therefore, I'm going to go back and move to the right, and my next peak is going to be here, the US dollar Japanese yen, which is giving us a near sensible opportunity. But notice in this case we are pointing at the 4-hour time frame for the yen, and therefore that's the trade that we're gonna assess now using TradingView. Okay, so USD JPY. Let's take a look at what's happening, and let me go ahead and check your questions here. Sarjana, review GBP Swiss franc edge time frame 1 hour. Do we have that GBP Swiss? Yeah, we are not dealing with the GBP Swiss in the 1 hour time frame. It's not wrong, but being a cross pair with little liquidity, we are, as you can see on the left, we have the pound Swiss. We have it there, Sarjana. Give me 1 second, guys. Seems that I kind of lost control for whatever reason. It seems that I have lost control of my mouse. Okay. Okay, I think everything is back to normal. Sorry for that, guys. So yeah, so Sarjana, notice the pound Swiss franc is right there, and we are pointing at the 240-minute time frame. So with spot forex, the currency pairs that we trade with the 60-minute time frame are the majors. We are not diving into minors for the 60-minute time frame. And again, it's not wrong, but it's not wrong only if you have a very, very, very good broker. And since I don't know which brokers you guys use, and probably most of you use different brokers, in order to avoid trouble, I prefer not to, by default, utilizing those opportunities. Okay, so I could certainly go ahead and take a look later on as an exception, but just keep that in mind. Okay, make sure that you're using a very, very fine broker. Okay. Stacyland, what indicator is that? Okay, I believe you are probably referring to the UFOs that I was plotting earlier here, or those little flying saucers there, right? You're probably referring to the UFOs, or maybe you're referring to the autoclimate. So we are using two tools in every time we do a session. We are using at least two tools. One is autoclimate below. The one on top is AutoUFO. It looks like that on TradingView. It looks like this on TradeStation. Okay, so it's kind of the same. Okay, a little bit of a different look and feel, but it's the same tools. So we have AutoClimate below, okay, and then we have AutoUFO above. So why do we use those tools and what do they do? So again, we have plenty of recorded videos on the YouTube channel that you can watch under the sharpening playlist that explain that very well. But to give you a summary of what it is, in our way to approach trading, which we recommend everybody to do that, the first question that traders need to ask themselves is it time to trade, yes or no? And if so, should I go long or short? That's the first question, because if you don't know if it's time to trade and you trade, you may be trading when it's not time to trade. And if it's time to trade, but you don't know if the right side in the market is the long side or the right side of the market is the short side, you may be trading against the market, and then you're going to get stopped out very quickly. And that's not a good recipe. Okay. And we want to minimize the times when this will happen. It will happen from time to time. I mean, it happened to us earlier with the pound. So losing is part of the game, but minimizing the quantity of times that happens, it's important. And therefore probabilities is something we need to keep into consideration. So how do you understand and how do you give answer to this question number one, which is it time to trade, yes or no? And if so, long or short? Well, that's when we look at what we call the climate in the market. Is it rainy or sunny, right? Is it time to go long? Is it time to go short? Is it time to stay home, right? So that's what the climate does. And this, by the way, is a free app. So you guys can download it from our website, tradewithufos.com/join. You have the app there and you can go ahead and download it, okay? We'll activate it for you. And if you don't have TradeStation, TradingView is free, okay? So you can use tradewithufos.com/tradingview, okay? And when you do that, then make sure you pick what TradingView calls the basic plan, okay? TradingView is a different company, it's not us, but they provide the charting, and the basic plan is free, okay? So you can go ahead and use that link, get the free plan, and you're good to go with the platform. Then to get your climate or UFOs, you use the same website, tradewithufos.com, and then you add /join. Okay, and when you get to the join page, you will be able to select there your auto climate and your auto UFO. Auto climate is free. There is a activation fee, but it's free for life the moment you activate your climate. And then auto UFOs has a monthly fee, which you could consider paying or not, depending if you like the tool or not, depending if you have a method already on how to trade or not. Okay. By the way, by registering to one of our courses, you also get to not only learn how to trade, but also utilize the tools while in the courses. Okay, so just another way, instead of registering, maybe a smarter way, it's just getting a course. So you kill two birds in one stone, which is learning how to trade and practice with the apps. So you master that. Okay. Anyway, so to complete my answer, a bit too long to be honest, since we need to trade here, but I just want to make sure everybody follows. You have auto climate, but it doesn't look like that. Is it Stacy Land? Is it with TradeStation or TradingView? Okay, is it TradeStation or TradingView? And then the auto UFO, which is right there. What that does is identifying unfilled orders in the market. On-field orders to buy or on-field orders to sell. Green is to buy, red is to sell. And therefore, this is basically the prices at which you buy and sell after you know if it's time to buy or sell. Okay. So yeah, so auto climate in TradeStation looks like that. That's how it looks like. Okay. Now I have my charts compressed all the way because basically the only thing I need to know is the color of the dot. So I make my charts very, very small just to save space and just see what I need to see. Okay. But that's all you need to see really. Now, if you maximize it, you also see these vertical lines. And again, if you are subscribed to the app, you have been sent a user guide. I recommend you to read it. And yeah, the EMA is not auto climate. The EMA is an EMA, and you can just insert that by going to Add Study, and you just insert an EMA. So you go for moving average, exponential, and that's your EMA. Okay, this is a standard study that comes with TradeStation. Okay, so the EMA is not part of AutoClimate. Okay, so you know if it's time to trade or not, and if it's time to go long or if it's time to go short. Now that you have this answer with AutoClimate, you look at auto UFOs and you know the price at which you want to buy and the price at which you want to sell, so you can set an entry, a stop, and a target and be in the trade properly. Again, I'm rushing into explaining this because today is a trading day. I'm supposed to be trading, okay? But there are plenty of videos in the sharpening session where we explain that with no rush. And beyond that, there are multiple courses in our website that you could register for and attend, like proper training from A all the way to Z on how we do all of this, if that is your interest, okay? Cool. So back to what we have. We were going to look at the yen in the 4-hour time frame, isn't it? And so here is the yen. And I missed another question here. Sorry for that, George. So George, the inputs I have for AutoClimate are the standard inputs, okay? Which are as you can see, 9:14:14. Okay, this is the standard inputs that come with AutoClimate. Yes, Marcel, there's plenty of explanations about auto UFOs. Again, take a look at the playlists on our YouTube channel. Okay, plenty of videos, over 200 videos. So you will find the ones in the sharpening playlist. Okay, that's why I'm pointing at that one. Those are the ones that are very educational video. They are like 2 hour long videos that go very deep into things. Okay, so get into that. Thank you so much, George. So back to the US dollar Japanese yen. Yeah, yes, Miracell, especially for Forex and all the other markets too. Trading is trading, really. It's applicable to all markets. Back to the yen, okay, guys? Hey, Boyan, how are you, my friend? Cool. So when looking at the US dollar Japanese yen, okay, what do we have? Well, as the red screen told us, we have a confirmed climate to the upside, so it's thick and blue, okay, thick and blue. So we are ready to go long. This is candle number one of what statistic would suggest could be 6 candles. So 6 candles, 4 hours each. That's a whole day. That's 24 hours. So that could be a lengthy intraday trade, potentially for a whole day, right? That based on probabilities and stats and based on market data, this would not be a crazy thing to expect. And therefore, for us to go long in this trade, we have a reference price, which would be 105.84. Okay, so 105.84 is our reference price. So now the question is, do we have any UFO above enveloping 105.84? And the answer, but when looking at the 21-minute time frame, the answer is no. The UFO starts at 60, which 60 is obviously below the EMA. So that UFO is not good. Okay. Now, again, as we did earlier, I'm not giving up yet. I'm going to switch to the 21 ranges. And the moment I do that, I may go ahead and find the UFOs I need. And guess what? I do. I do, but I'm not going to take the trade. Okay, I do, but I will not take the trade. Let me explain why. So we are ready to put together a trade, which is potentially a 24-hour trade, right? If I turn on the UFOs on the 4-hour time frame to set my target, notice that my target would be 106.50. It's 70, 80 pips away from what my entry would be, right? So it's a decent move. Let's call it a decent move. And for me to catch, even if it was to be 50 pips, okay? So basically, I would be relying on a UFO where if you calculate the distance from 84 to 82, that's 2 pips, right? So you are planning to risk, and of course we need to leave Forex trades breathing space for the stops, given the decentralized nature of these markets, isn't it? But putting that on the side, you are risking 2 pips to catch a 50 pick move. So that's what, like a 25 to 1. It's kind of those cases in life, or these cases in trading, where it's kind of too good to be true. And guess what? When things are too good to be true in business, and trading is business, typically they are too good to be true. Is that making sense? So what are we gonna do? We're gonna ignore it, okay? Because it's too much of an expectation, which is not realistic, to catch such a large move, out of relying on such a tiny UFO. Okay, now if you told me that, like we had before on the pound, which didn't work, by the way, but we had multiple UFOs on top of each other, and they are kind of overlapping each other or very close. So then yes, I can rely on that. Okay, but here if I place a stop below 81, even if I add 5 pips of breathing space, I would come down to 76. So in other words, that second UFO will not be able to help the first UFO if the first UFO is going to fail. So I'm just going to pass on the trade because, while on paper, if you do the math, it would be like, oh, wow, I'm going to make 70 pips while risking 2 pips only. That looks amazing. Again, this is not realistic, and we don't want to make this type of mistakes in trading. We want to stay realistic all the time, okay? We don't want to lose the realistic approach to trading just because, we gotta be greedy with money, right? Next thing you know, it's like so appealing. It's like, oh my God, this trade is amazing. And next thing you know, we forgot, oh, wait a minute. Doesn't make sense, right? That you're going to catch multiple dozens of pips by only risking 2, right? So doesn't make sense. So stay realistic, guys, and that will keep you a bit safer. Okay, what else do we have here? Sarjana, for EMA in common time frame, use setup for open or close price. We use the close price. Okay, we use the close price. Again, the concept of common is that you want to use what everybody uses. That's the concept of common. For you to make money, you need more people to do the same thing you did after you did. Okay? If you buy, you want more people to buy after you buy. If you sell, you want more people to sell after you sell. And this concept implies that you don't want to make your moving average to be too special. You want to use the moving average that comes by default. Okay, that's why we apply it to the common time frame. Okay, so there is a lot of rationale behind every one of the steps that we apply when we trade. This is what we explain properly in the course environment. Okay, and Sarjana, for the UFO calibration, you have videos on calibration on the channel. I don't use 0.5. I can show you what I use, but it doesn't mean you have to use what I use. So I use 0.618. That's what I use. But you don't need to use that value. You could use any other value, because basically what the calibration does is it adapts AutoUFOs to your trading style. You may want to be a trader who is very active and trade very often. You may want to be a trader who is less active and trade less often. Okay, so calibration adapts AutoUFO for that trading style, and therefore there is a series of exercises to do for you to understand better which calibration should you use. So please don't copy me while what I'm using makes sense, while 0.5, which is the calibration that comes by default, also makes sense, while any other calibration will make sense. The reality is that it would only make sense if you were to understand the trader in you, the type of personality you have, and how active you want to be when you trade. So I would recommend you to watch, read the user guide, first of all, watch the videos on the sharpening playlist, and from there you will be able to calibrate AutoUFO in a way that is 100% adapted to you, and it will make a difference to you as a trader. Okay, cool. What else do we have? Okay, we have it. Great. So let's continue, guys. Okay, it's basically time to conclude our session. Okay, but I would like to give another chance to futures markets to see if we can have a trade. Well, here we go. Finally, Nasdaq changed climate, is a red climate now, and it's confirmed. We have a near sensible. So let's go ahead and look at the Nasdaq on the 15-minute time frame. Hopefully, we'll have a trade. If we have a trade, we'll plan it, and if not, then we'll call it a day. Okay. So Nasdaq 15-minute time frame. My friends, I believe we have a trade. We do have a trade indeed. Let's get going, guys. Okay, this may happen quickly, so let's get organized so we can have this trade ready to go quickly. Okay. Let me see. I need to connect to the right account. Trading panel. Okay. Yeah, I want to connect to trade station. Here we go. So perfect. So I am connected on TradingView with the Nasdaq. I am connected on TradeStation with the Nasdaq. We just went into the UFO that was there a second ago. That was going to be an entry. Anyway, let me explain, and hopefully we have another UFO that may meet. You know what? The trade is still valid. We can still take it with the other UFO here available on the right. Great. So let's do it. So we have a climate which is thick and red. So it's a down climate. Our reference value for the trade would be 24 something. Okay, and 24 something happens to be the beginning part of that UFO that starts at 23.5. Okay, 23.5 to 33.7. Okay, that certainly is a valid range for us to take a trade. So 23.5 is going to be our entry. Okay, so entry to short the Nasdaq is going to be 23.5. Okay, stop is going to go above that UFO, which is 33. Actually, it's going to be 34. Okay, so it's a pretty high risk trade. We are risking $245 per contract. So it's a little bit of a wide UFO with multiple points. Did I input this correctly? No, I have not. Okay, so we have 23.5. Okay, now I got it. So 23.5 to 122.34. Yes, that's $210 of risk. Now I have it correct. Okay. Now, so again, price came into the UFO, okay, and it's dropping from there. So we may end up being late to the party. The UFO is still on the screen, so we can still take the trade, and price could certainly come back, get into the UFO, and then fall. So I'm gonna bet on that. If not, I will just have been a bit too slow. Okay, and I will have missed the trade. And the other thing I want to do is to turn on the UFOs to find out where my target will be. And it seems that my target would be located at 12,111.5. So 12,111.5. Okay, it's a very, very far away target. That's a 10 to 1, my friends. Okay, it's a 10 to 1. Looks amazing. We're risking 210 to make $2,000 over dollar per contract. That's looking very good. By the way, if this trade is too big for you, you can always use micro and mini contracts. Okay, and that would be 10 times less. Okay? So everything would be 10 times less. Well, price just came back to where the entry is. Okay, so let's go ahead and place an order. I have not calculated my safety target. Let me do that quick. This is a bit too rushed, to be honest, but hopefully I can do it still. So we can use this example as a good practice. Minus, that's 10 points. So safety target will be 12 to 13. Okay, so let's place the order. So trade, we're gonna use 2 contracts. Short. Okay. I was like, it's gonna happen. It's just gonna happen. So notice what just happened there. The UFO went away. Okay, it means that too many orders are being filled, and therefore the climate is potentially going to change. The unfilled orders are gone. So it's no time to take the trade any longer. Okay, now if you are in a trade, for sure you are in a trade, and you may be stopped out. The thing is that if you are in a trade, time stop is counting. Okay, and it may get you out of the trade earlier, and hopefully you end up not being stopped out. Okay, but certainly the fact that the UFO went away, it's not a good news. Okay, so right now we are fully relying on the EMA and the climate. Okay, and obviously that's 2 forces out of 3 because the unfilled orders that were available, all of them were gone. The unfilled orders available took. Let me make this chart a bit larger so you see that well. I'll explain this and we'll call it a day, guys. Okay. So the UFO that was there, okay, the UFO that was there is the one responsible for this movement of price from here to here. Okay, but when price came here the first time and came back, not only here, but then came back to the same price area again, many unfillers were filled, and then the app decided, based on the algo, that, hey, there are not enough unfilled orders left for this trade to be qualified as a high probability trade. And then the UFO went away. Okay, so now you can see there is a fight. You can see the power of the EMA. You can see the power of the climate. So it's not like price, consume all the unfillers and kept going. Remember, we still have 2 out of 3 forces fighting for the trade to work. And you can see here the struggle and price trying to go down. And guess what? In a minute, we may have a UFO that forms here. Could happen. Okay, we'll see. And if that was to be the case, then I'm going to be open to replace an order and re-enter the trade. But while the UFO is gone, so if you entered before, then you are in the trade. Time stop is working, so you may exit with a time stop. But if you're not in the trade, of course, don't enter just because there was a UFO sometime in the past. The UFO is not available now, so don't enter because your probability is related to 2 forces instead of 3 forces. Okay, so just waiting. Okay, we're just going to be waiting here, and potentially a UFO will form, or maybe not. I'll just wait for a little bit because really the session is over since 8 minutes ago, and I want to be respectful with the scheduled time as well. But I would also be very, very happy to give you a live example of this, because this is one of the things that will happen to you when you practice on your own. After the session is over until next week when we meet again, isn't it? So I want to make sure I leave you with homework, or when things happen, you get to understand. Here we go. We just got a UFO. You see it right there? Okay. So this UFO is moving now from 27 to 33. So unfortunately, it does not qualify. So in the end, we will not take this trade because 25 is not between 27 and 33. 25 is below. Okay, 25 is below. But again, while we did miss the trade and I was not able to be in it, I think this is a good example of a series of things that will happen. And again, if you were in a time stop type of scenario, probably you're exiting the trade now, and this trade would be a trade, with a very limited profit. Maybe you were risking 200 over per contract, so maybe this trade ended up making you, I don't know, 200 or $300, and that's it. Nothing magic, but again, it's been a great example, I would say, from an educational point of view, because you got to see the different forces at play. Even when the UFOs were gone, the EMA and the climate were still fighting, isn't it? And because the climate and the EMA and the EMA specifically was adding more on-field orders, it seems that there was a moment in time where that was picked up by the app, and now we got a new UFO form in front of us. So all those observations is what you want to go over when you are doing the practice on by yourself. Okay. Anyway, uh, good one, everybody. Let me see. Fairmont last night, I risked 4 pips to make 39. I hit safety target, but stop out on target Canadian dollar, Japanese yen. So I was not realistic, but hopeful. I get you. I get you. But it's good that you are doing the practice. It's good that you are doing review. Is that you are good? It's good that you are doing some observations. Make sure you make notes and you create yourself a log. So as you keep reviewing what you do, you'll be able to identify little tweaks and maybe changes or variations of certain rules that could make your trading to be more efficient. Okay, but a good one. I'm always delighted to see when you guys put the hard work in place, because becoming a trader takes hard work. It's not a joke. And when I see you guys take it that seriously, I really love it, and I appreciate that very much. And I congratulate you for that, Fremont, and keep up the good work. And everybody, make sure you do the same, because that's the recipe to become a good trader. There is no magic bullet or magic anything. Even with powerful tools such as UFO, you still need to develop yourself, and the market will tease you, my friends. Okay, the market will challenge you at times by getting you in euphoric mode, or getting you in fearful mode, or getting you in all type of situations that you will get to experience firsthand. I promise you that. So anyway, my friends, the session is now concluded. I will see you on Thursday doing options, and again next week with short term. You guys take care. Thanks for joining me. Bye bye.